for Global Business Update. Michael Wilson joins us now from London. Michael, great to have you. Good morning.
Good morning, everybody. Well, it's still a fairly mixed picture as far as Asia Pacific's concerned. The big standout, basically, Australia, whose inflation has come in much lower than expected, 5.6% year on year. China profits as well on their industrial profits, industrial companies down about 18% so far. The Shanghai Composite, the Shenzhen component, really not recognizing that at the moment, both down very slightly indeed. Now, as you know, there's a World Economic Forum taking place in China, and one country there, particularly Hungary, has been saying to the EU that they decouple from China at their peril. They should not. Because obviously China is one of the strongest trading partners that the EU has, and this is in the face of the US, for example, urging countries to decouple from China. Hungary is saying, don't do that. It would be bad for the future of the EU. As far as the US is concerned, again, the markets just taking life into their own hands, really. The Dow up considerably. S&P futures, though, have inched lower. There was a big rally on Wall Street yesterday. Jay Powell speaks to ECB and also UK central bankers today at a special central bankers conference in Portugal. And what he says will be scoured for any kind of indication of where the Fed is going, how long it's going to keep interest rates higher. I don't think they'll get much, but every word of his will be parsed and searched, and every turn of expression, every part of body language, people will actually be searching for clues. The feeling is now that tech stocks are doing particularly well in the United States. I mean, is this true? Who knows? It seems to me it's what they call the momentum market. Sometimes it's higher, sometimes it's lower. Depends where the majority of people are actually going. The IMF, now, building on what Geeta Gopinath was saying yesterday, she's saying that people should not gamble on central banks making cuts in their basic interest rates. She, as you know from what I was saying yesterday, is one of these people who says that inflation is the first thing, and if it means that central banks have to keep interest rates higher, then they will. That's according to the deputy. She's the deputy managing director of the IMF. Back to the UK, and this mortgage misery, which is being compounded now by higher interest rates. 2/5 of sellers apparently are accepting 5% discounts in order to try to sell their properties on a market which is suffering. This is. UK buying power is down by 11% as a result of the mortgage increases. This is from a property company, a property site called Zoopla, which a lot of people actually take notice of. The UK is also warning that Brexit has pushed it down the queue of supply chain suppliers because of border controls, which are very difficult, particularly Big Pharma. Big Pharma suppliers are noting this. They note that Big Pharma has moved to Ireland, which is in the EU, not Northern Ireland, but Ireland is in the EU. Pfizer, AstraZeneca, the major big pharmaceutical companies. Eli Lilly is the other one, and they've moved their operations to Ireland, and it's the UK suppliers are finding a lot of difficulties with the border. The future of Thames Water, very much in the balance this morning, lost its CEO yesterday. The whole of the privatised water companies, Thames Water owned by a clutch of private equity, overseas investors, UK investors, and so on. But some of these companies may have to raise their prices by 40%. That's what they're thinking of right now. And certainly 15 million customers of Thames Water are wondering what what its future holds, and the government are wondering whether or not they need to step in. Another victim of consumer lack of spending, Boots and Walgreens. Now, the Boots-Walgreens alliance was something that I was pointing out at the beginning of the week would be an important view of whether or not how retail is actually going, both in the UK and the United States. We got the answer this morning. 300 Boots branches are to close. 150 Walgreens are going to close in the United States. The shares are at their lowest in 11 years as a result of that. And the UK is also agreeing to meet the EU twice a year to talk about regulation of financial services. Jeremy Hunt has agreed to that. He's saying that they haven't agreed to principles. They're just meeting on a voluntary basis just to see what the pitfalls, what the advantages may well be. Now, you'll remember this is one of the things that wasn't mentioned in the Brexit negotiations when the vote was put to the British people all the way back in 2016. And you won't need reminding, of course, that the City of London appears to be losing a lot of its business to other exchanges, particularly in New York. Oil lower on growth fears, as you'd expect, recessionary fears as well affecting that. And gold, again, waiting on interest rate rises. It's pushing downwards towards the $1,900 an ounce, which we have been thinking it might set records well above $2,000 an ounce, but so far not to be. That is the global view this morning.
Okay, so since it's been close to a week now since the mortgage debacle started in the UK. But again, the sad reality, there are no solutions. There are no solutions to the problem, no way forward on the problem. So is it that the British people have to suffer this? People that their cost of living crisis is already killing them will have to suffer this? And I don't know what is wrong with the Tory party, but there seems to be no solution, even across board with the Labour Party too. I don't know what you'd like to say about this.
I think you're absolutely right. I don't think there is a political solution to it. It's money borrowed, and money's got to be paid back. And it may be that the banks allow people to pay back over a longer period. It may be that instead of repayment mortgages, people can shift to interest-only mortgages, which the banks have agreed to. But basically, there is a problem. And until some kind of movement happens in the housing market, now I reported this morning that sellers are being pushed towards 5% discounts on their prices. I mean, a house is only worth what people will pay for it, and that's a fact of life. People think that their houses are worth more because they've invested a lot of their time, they've lived in the place and so on for a long time. It has a lot of emotional attachment. Unfortunately, the market's all about what people will actually pay, and so sellers are beginning to find this may lead to cheaper housing. The one thing against that, which I still don't really understand in the formula of it all, is the fact that we don't have enough houses in this country in the kind of places that people actually want to live. And until the housing stock magically expands, and I see no prospect of that at all at the moment, then I can't see the housing market crashing. I can see that sellers are saying we're going to make our price more attractive to possible purchasers, but that's as far as it's going at the moment. So eventually, to answer your question, yes, there will be a lot of pain. Yes, this has been going on for a long time as well. It's not just in the past week. It's been going on for a long time, since mortgages and since interest rates started rising. And apparently they've got further to go.
All right, Michael, over to China and the news you talked about with regards to industrial profits tumbling. And just looking at the announcements last week made by policymakers in China, the Chinese government, that they would support the electric vehicle sector through tax breaks for the next 4 years. Will that have any impact on stabilizing the that sector in terms of industrial profits? And very particularly, are there any more measures that policymakers must deliver to balance, to stabilize things?
You should turn to the person on your left, because he and I have been talking for a long, long time about the property sector in China, which is the if I can put it like this, the elephant in the room at the moment. It doesn't matter really what the government says it's going to do. I mean, yesterday their premier was saying, China's premier Li Kang was saying that China will meet its growth forecast of 5% year on year. Who knows? I mean, it's opaque, so we don't know. But what we do know is, yes, you're right. The government is stepping in. The government has made some banks reduce their interest rates, reduce their deposit rates rather, to try to move money into the economy. But the big thing, I still feel, I don't know, Doctor, probably. I hope he agrees with me. Is the fact that the property market in China is the big thing, and until the likes of Evergrande are sorted out, and I suspect there are moves to try and sort out what they are. I don't know yet. I think that it's got a long way to go. So little snapshots like this one this morning that I quoted to you about industrial profits being down are really the only tidbits that we get to work on to try and find out what actually is going on there.
Well, two quick things, Michael. Recession. All the strategies at HSBC Asset Management, JP Chase Morgan, Bauport, and everywhere, they're saying, well, there will be recession. And HSBC Asset Management is just telling us that the US will go into recession by the fourth quarter, and Europe will follow next year. Well, are these predictions so certain, considering the fact that consumer confidence is rising? And some other analysts are saying, with consumer confidence rising, with demand accelerating, that there may well not be any recession, particularly in the United States. That's one. Second, in March, we had the Windsor Framework. And now, a few months later, the UK is saying, oh, we've signed a financial services memorandum of understanding with the EU. Now, what does this really mean in real terms, apart from what we've been told that there will be talk shop about twice or thrice a year to have dialogue? Will it possibly lead to any significant changes in the relationship between the UK and the European Union countries?
It is a memorandum of understanding. It's not an agreement. And I think that Jeremy Hunt was saying yesterday that this is not an agreement. We haven't agreed to anything. All we've done is agreed, as you put it quite rightly, I'm sure, to have a talking shop twice a year. That's all this is. If you think it's constructive for sides to sit down and talk about their worries, talk about their aspirations, but also understand that the markets are, whether we like it or not, interlinked, and of course they are. Quite simply they are, then I feel this is relatively positive. But the UK and the EU are not saying any agreement has been reached. This is just a memorandum of understanding that there will be, as you put it quite rightly, I'm sure, a talking shop twice a year. As far as recession globally is concerned, I don't know about you. I couldn't predict next week. And I'm sure that all these companies, the JP Morgans, the rest of it, let's look at them really coldly and let's work out what they're doing. What we know about these companies, never mind what they say, never mind what their chief economists say, we know that they've taken a position in the market and they have to defend that. And so I would think that there's a lot of this in there. They're saying, look, there will be a recession. Now, if there isn't, and these companies perform, then their investors see them as being quite good. That's all I would see. There could be a recession, there might be, there might not be, but lots of things can change over the next 6 months. I honestly feel that these kind of predictions are probably scarcely worth the paper they're written on. But they're useful to know because it's what sort of drives the market in lots of ways, certainly driving the oil market as we speak. But the OPEC Plus may say something tomorrow. Supposing OPEC Plus say we don't like the fact that the oil price is where it is and production will get tighter and so the price of oil will rise. Why has the price of oil not risen on the instability clearly happening in Russia right now? It's because the traders are too focused on day-to-day stuff rather than looking long-term, because they simply don't know. I think the JP Morgans of this world ought to acknowledge the same thing.
Well, thank you very much, Michael. Thank you very much indeed. Now for business updates across the African continent. Rotus Odiri joins us. Good morning, Rotus.
Good morning, Doctor. Good morning, Ayo. Good morning, Rufai. Good morning to all our viewers and happy Eid. We begin, of course, with Nigeria. The latest development update from the World Bank that was released just last night, or just yesterday, referring to the fact that, seizing the opportunity, Nigeria development update. So they're basically praising the Tinubu reforms, but saying that there are lots of challenges up ahead. Let's quickly rifle through this because there's so much to get to. But essentially, in the first part of this report, the excerpts that we have here, they're basically saying the recently undertaken PMS subsidy and FX reforms are historic. Nigeria will get about 3.9 trillion in savings. And not 3.9 trillion is going to come to us. You're just not going to have to spend it for the year. You can use that for other reforms. It stops Nigeria from going over a fiscal cliff, sets the stage for a new upward investment, growth, and development trajectory. They continue saying that as far as this is concerned, inflation impacts will be temporary, but will be significant. So they need to do, and this is the part that, governance is hard work, and how they're going to do this. They're saying that they should do targeted financing to households, and it should be data-based. So how you corral that, ring fence it, to figure out who gets what, how long you do it for, make sure it doesn't last forever. That's going to be a lot of work for the government. The report continues saying that, and this is what made the headlines in this day newspaper, 4 million additional Nigerians falling into poverty in the first 5 months of the year, January through May. This is something that the administration has to deal with. Inflation is causing headlines around the world and moving markets. You heard Michael Wilson talk about Australia's inflation decelerating to 5.6. The ASX SP200 that moved upwards as a result of that. So you got to get folks out there. And this is the thing. The clock is ticking for the administration because this, of course, was the first 5 months of the year before the administration came into power. They now have to make sure that they move very quickly because the fuel subsidy removals and exchange rate reforms will accelerate inflation. And so you now have to make sure that your targeted assistance to households, you move it quickly because that 4 million figure will grow towards the end of this year because of the impact of what we've seen. But the report continues. They also talked about the exchange rate disparity. I mean, look at this chart here. You've got the I&E window, I&E rates at 4 something in dark blue at the bottom of your screen. And you've got the parallel market rates in light blue. I mean, look at the premium started out about January 2022, FX premium, that is the difference between the I&E rates and the FX rate and the parallel market at 37%. It's skyrocketed to 63. This is a period within which Russia attacked Ukraine and oil prices were climbing. But then now this has come down. By the time they put their next report out, at least between June, July, you will now see that this line come down and then converge with the I&E rate. So that's something that definitely has to be addressed. Now, speaking of FX, and speaking of the turnover that we've seen in the window, Nigerian banks are now allowing for individuals to convert their FX to Naira on banking platforms. So using internet banking, you can actually take money, FX, from your domiciliary account and convert it to Naira. And the rates are competitive. This is Wilson Erumabo. He's an economist. I think he's in the UK now, but he tried this out. And there he is saying, I tried this and it worked. Exchange rate was 771. That's how much he got for his dollars converting it.
Have you tried it?
No, I haven't tried it. I'm using an app. It's on the internet platform. You need a token. I don't use tokens. I prefer to use an app. So we've talked to a number of people that have used it. We have been living in bondage since. We simply incentivized inflow into the parallel market and created that wide gap for no reason. So now that, and you've seen turnover, if you look at the turnover on the I&E window, it is climbing. So we still need to, I think we did about $198 million or so a couple days ago. We need to get to the stage where we're trading about over $1 billion or so as far as that's concerned. So that's on that. UBA, we're going to focus on the banks now. United Bank for Africa, they have introduced account opening for the visually impaired. So it's Braille, basically. You're seeing Cobam's Asuko there, and members of the UBA, also Lagos State government as well. Here's what he had to say. He's endorsed it, very excited. I said before now, we've always been at the mercy of the reader when we want to do things like open accounts for ourselves. But this account opening form has come to solve the problem of access, which has previously been a huge limiting factor for people like me who are blind. And then he continues saying that with what UBA has brought forward, with this initiative, UBA has promoted our ideal of inclusivity and has helped to put back freedom in our hands while opening us up to the variety of opportunities and options available. Still on banking, GT and Zenith crossed the 1 trillion naira market capitalization levels yesterday. Again, it's a testament to how the financial sector has taken off since the FX reforms. Investors seeing that, look, the banking sector is going to benefit from whatever monetary policy reforms are going to take place. And that by the time, I'm waiting for their quarterly results to come out. By the time quarterly results come out, the revaluation gains for a number of these banks are going to be huge. So GT, as of yesterday, has climbed to 34 naira 40 kobo. If you want to calculate your market cap, you take your shares outstanding, multiply by the share price, you get a 1 trillion naira market cap. And look at the returns. GTCO 40.6% year-to-date return, and that's not even counting dividends. Same for Zenith, 34 naira, shares are standing 31.3 billion, market cap 1.06. Their year-to-date gains 35.4. In addition to financial stocks, downstream oil and gas stocks have been on absolute tear. I think the MGX now is up about 18% or so. For owners of vehicles, there is a fee that is apparently going to be imposed for vehicle ownership. It's I think it's 1,000 naira per year, and we understand that this fee is supposed to, according to the various government agencies, it says it's going to enhance either data capture, transparency, or the likes. I mean, you already have roadworthiness and your other existing vehicle particulars. I'm not sure how this helps, but everybody's looking for money right now, and whatever can come in, you bring it in. We quickly round up with Kenya. Dr. Kamal Thuge, who is the new central bank governor of Kenya. They had an emergency monetary policy meeting, I think yesterday or the day before, hiked their benchmark rate to 10.5. I think inflation continues to climb. They're trying to arrest the situation. So they already have a meeting scheduled for July. This was an emergency one they put together. So I think this is the highest rate since 2016. And then speaking of how hard governance is, Mr. Ruto signed in a controversial finance bill, which is getting a lot of backlash. But he's backed into a wall. Kenya is, in fact, I was just talking about the stock market. Kenya's foreign investors, at least foreign portfolio investors in their stock market on the Nairobi exchange, they cannot repatriate their funds out. Same situation with Nigeria. So they are facing FX scarcity, high dollar debts. They need to get funding from the IMF. This bill is going to jack up VATs on fuel products by 100%. It's going from 8% to 16%. So there are protests planned. The opposition party is saying he's terrible. And it's just interesting, him coming in, and he came in on a wave of popularity. He was removing fuel subsidies, but governance is hard. And that's our update from Africa.
So, Rotus, I always say that the Nigeria economy is dynamic. If you put back your charts, let me now show you one thing IMF did not see. Can you put back the chart on the currency convergence very quickly?
No, it's not convergence, so it's widening.
The widening. Put the goal is for convergence. So just put back the chart. If you put back that chart, Rotus, you will see that the thick of that widening started when election cycle started from May.
Okay, yeah.
You remember what was happening in May?
Yeah.
That was when they were preparing for party primaries, that they dole out a lot of dollars.
Right. But in a low supply environment.
You get.
Yeah.
And you can see the effect it had on the market.
That's right.
The big spike we had, the big dislocation we had, was caused by these same politicians. Look at it.
Yeah.
Look at it. And it was after the party primaries, the dollar debacle started full swing. I remember January we were still, trading for a reasonable amount. Look at the disparity. And that continued and it flatlined during the election cycle. Because there was a lot of spending, and that continued. So that's why I keep saying that our economy is
we have to be careful. We cannot attribute this all to politicians, though. FX supply has been low, oil theft and everything.
Let me now extrapolate the facts for you. Russia-Ukraine war started in February.
That's right.
Go and look at the chart in February.
Yeah, so the premium was still there, yeah.
It was the politics that look at February 2022 when Russia-Ukraine war started. Look at March. Look at May all of a sudden. When the party primaries kicked in.
Right.
So these are the things World Bank doesn't see that we here, local intelligence, we always see.
But Rufai, one quick point.
No, I'm just explaining.
When you sell, I get you. Let's just break it down. Yes, party primaries. So there's a lot of demand for dollars. Politicians will go and buy the dollars and use it to bribe people, right, for their electioneering. The people that they bribe receive the dollars. They don't keep it in their pockets. They will sell it back into the markets in order to get naira for it. So that's what I'm saying. You have to be careful. You cannot say it is just politicians that jacked it up. The money circulates back into the market.
It's still the same thing we are saying.
I get you, but
the slippery slope
yeah.
started from the politicians. That's what we are saying.
Admitted with other factors.
You get the slippery major slope started from the politician. Go back and check your indices. You will see that it was when party primary started, all of this started. It goes back to my point. That's the dynamism. And that's why when economic planners plan, they fail to remember the cultural issues that we have within.
Right.
You will have thought in a right-thinking environment, what correlation does a dollar spike have with our politics? But our politics has been dollarized.
Well, the whole economy is dollarized.
The whole economy is dollarized. And that's why you're seeing the challenges we're having. So with all of this, our reform, let's also check the behavioral issue. People don't even give people dash money again in naira. It's now dollar.
Right.
So those are the problems we are seeing, and that's what the World Bank will not see in most of their outlook and most of their analysis. My second point, it is sad what Ruto is going through.
It's backed into a corner.
But it's backed into a corner.
Yeah.
And that's why we always say you campaign in poetry and govern in prose.
Yeah.
How he's going to dig himself out of the problem is his own problem. Rotus, I'm happy about our banks. And I'm not even going to celebrate what is happening now. I'm going to celebrate Governor Soludo of Anambra State. If not for that reform many years ago, by increasing market cap, and I think our banks are due for another increase in market cap.
Yeah, because of the dollar.
Because of the dollar factor.
The exchange.
Because when I saw the 1 trillion, look at it. When I saw the 1 trillion, compared to banks like ABSA, it's still a far cry.
Yeah, but ABSA is South Africa.
You get,
so Africa is much
we can still do better. But kudos to him for those reforms then. I yield the floor.
Stay on banks, but I'd like to discuss the story on UBA.
Yes,
and I think it's such a great initiative, and it's long overdue. Nigeria had its Discrimination Against Persons Living with Disabilities Prohibition Act in 2019, and a few provisions there made, which unfortunately hasn't been adhered to. But the reason I'm centering on this story, Rotis, is that whilst this is great in terms of a bank account in Braille, or documents in Braille, it's that it is still at the very lower rung of the ladder when it comes to institutions and how we respond to persons living with disabilities.
Right.
And also effect on businesses and accessibility, or excluding them in terms of access to services. A quick example I would say is buildings. And this is one of the provisions of the Act, whereby buildings have to be accessible within 5 years after the Act was signed. That's 2024, if it was 2019, since it was signed in 2019. But unfortunately, if you're going to pick up this form, you need to be able to access the building, don't you? And I know that this is something that persons living with disabilities have campaigned for, or advocated for a while. And that's why I'm using this opportunity to bring it to the fore again for businesses, especially institutions like banks, institutions whereby they can actually afford to modify their buildings to accommodate persons living with disabilities. So congratulations to them. Great job, and I hope other institutions will follow suit, but it's just the beginning, and hopefully they can do even more to support persons living with disabilities.
Well, additional comment on that, and that's to commend the UBA for providing leadership in this particular regard, and for other banks to follow the example of UBA, because other banks can also learn from this leadership that the UBA has provided. Now, this idea of opening Braille accounts for the visually impaired would achieve the objectives of inclusiveness, the objectives of equality, the objectives of non-discrimination, which are some of the principles spelled out in the Discrimination Against Persons with Disabilities Prohibition Act of 2019, which was one of the major achievements of the Buhari administration, because it was President Buhari that appended his signature to that particular law. Even if we have had problems in terms of the implementation, the commission that was set up has not been properly funded. Persons living with disabilities have had to even go to the Senate to protest. During the recent elections, persons living with disabilities came out and said, look, they should be part of the campaign process, and that they were willing to even function as electoral agents for political parties, because after all, politics is for everybody and nobody should be excluded. Which is why in the banking sector, I believe that the UBA has to be commended. Now, as pointed out, there are many provisions in that act. Section 3 to 6 of the Prohibition of Discrimination Against Persons with Disabilities is the one that talks about access to physical structures. Many of the structures, particularly government structures, you can't access them if you are a person living with a disability. So there is a long way to go. And also, in terms of the enforcement of that particular law, maybe it's about time that the Tinubu administration took a second look at it. Because that law prescribes for corporate bodies that discriminate against persons living with disabilities a fine of 1 million naira. For individuals, a fine of 100,000 naira or 6 months imprisonment or a combination of both. Maybe until people are sanctioned, we will begin to realize that persons living with disability, that there is ability in disability and that they are members of our community. Now let me talk about the Nigeria Development Update report for 6 months, June 2023, which was presented by the World Bank in Abuja. A number of issues came out of the conversation. The presentation was by the lead economist for the World Bank in Nigeria, and then they had a panel of discussants. But what are the issues? Both the lead economist and the World Bank country director commended the Tinubu administration for taking the step to remove fuel subsidy, for harmonizing the foreign exchange, and which is what the World Bank and IMF have been recommending. Mm-hmm. So it's like saying you've taken a good step. They concluded that inflation will go up in the short term, but that by the medium term, we're likely to witness disinflation. And there was an emphasis on taking care of the poor and the vulnerable. And during the discussion, Mr. Wale Edun pointed out that, look, the government is working on palliatives. And the question is, okay, you've removed the subsidy, you are not just talking about palliatives. The point we have always made here is that the consultation that is going on probably should have come first. Before the removal. But he assured other discussants there that there will be, palliatives, of course, for Nigerians. And then we're told we're going to save a lot of money. About 3.9 this year.
That's right.
About 11 trillion by 2025. The question is, what are we going to do with that money that is saved? Yeah. I hope it will not go into conspicuous consumption. Mm-hmm. We've been given 800 million loan approved by the World Bank. Yep. Another $500 million loan has also been approved by the World Bank. Yep. All of these monies will have to be managed. The cash transfer that the World Bank country director is recommending, I hope it will not be like the world transfer, a cash transfer very that we saw during elections. And we didn't know the households that benefited. Right. So there's a lot of work to do.
Absolutely. Well, thank you very much, Rutus, for your time this morning.